Thank you all for being here. Fred, thank you for being here. How many of you, by the way, I think there are a lot of familiar faces. How many of you are coming tonight to the Fed for the first time? Still quite a few. Okay, good. And Fred, you're included. That's good. And that's great. And as you all know, listen, Darren has done a great job, Darren Peschel, of broadening our reach in the community, making sure the Dallas Fed and Houston Fed are leaders in our community. But we want to do more and more events like this to encourage people to come to the Fed, to explain, demystify what we do, and to bring leaders that are important in the country and in the world to our district, so we can talk about important economic events. And so, in that regard, thank you for being here. And so, let me just start with. So, this is really helpful. But I'd say most people in this country, and you deal with this every day, I know, probably don't have as good a feel as they might on what XM does. So, just in your own words, what does XM do? Why does it exist? Why is it important in the United States?
Well, good Lord. The mics are on. As was mentioned, Jesse Jones founded the Exim Bank, and in fact, your taxpayer dollars at work, I sit at the same desk, so that desk is 82 years old, and so we're making good use of that investment. And I'm actually looking at Eduardo Aguirre, who was our vice chair at Exim Bank before I got there, but we've become very good friends in the interim. What Exim Bank does, and was started, as I said, by FDR in 1934, is two basic things. It levels the playing field when U.S. companies are competing against foreign companies and need financing in order to close the sale. If the government of China or Germany or France, Korea are providing financing, we make sure that U.S. companies are similarly armed so that they can also have a level playing field to compete. So people can buy the best product, not necessarily because one country offers loans and we don't back our own countries. That's one. The other area, and 2/3 of the lending we do is in developing economies, and that is where there's just not the capacity. Give you an easy example. We do a lot of lending for aircraft to Ethiopian Airways. Ethiopia is one of the poorest countries in sub-Saharan Africa. There is not the capital markets there to support those purchases. The airline is a major moneymaker for exports and trade and tourism and business. So we fill in that market gap. So we both fill in the market gap and we level the playing field.
So in that situation, for example, you will give, in effect, you'll give a loan to Ethiopian to help finance the purchase of a U.S. product.
Correct. And by leveling the playing field in that case, they have a choice between Airbus or Boeing in that particular case. We want to make sure that when they're making a decision, they're going to purchase the equipment that's right for them, not because Airbus, backed by Germany, France, and the UK, is providing financing and we're not.
So one question that's come up, and you've heard this many times, so why doesn't Boeing just provide that financing themselves through their finance company?
Well, Boeing is an aircraft company. They're not in the finance business. You know, if you run a grocery store, I'm not in the restaurant business. I'm in the grocery business. So they are not a finance company. Many people have said, it's anecdotal, that one of the things that actually hurt the McDonnell Douglas company many years ago was they were actively financing their purchases, not putting money into R&D, and as a result, they ultimately had an obsolete product. So Boeing does it. I mean, frankly, the really, really poor credits, they do. They don't send those to us because they know better.
Right.
But we do, you know, again, 90% of the companies we work with, 90% of the transactions are small businesses. And I ran a small business, a family business, and small businesses have a couple of strikes against them. One, they're small. Banks don't like to deal with them. They don't make enough money. Two, and if they're exporting, their banks are reluctant frequently to deal with an exporter. So we fill in that gap for them. And as I said, 90% of our customers are small businesses.
So you explained to me, you were telling me, we were talking before, your loan loss ratio is?
Right now, our reauthorization, we get reauthorized by Congress. We provide an update on our defaults or write-offs every 90 days, and we're running at about 26 basis points. 0.25%.
So that, according to your note here, so you therefore remit to the Treasury, this is in the last year, $284 million?
Yeah, last year was a low year.
Yeah. And explain why. You were telling me because because Congress did not reappoint the board,
Right.
what are you allowed to do without board approval, and how did that affect your operations?
So, as I had mentioned, we have two major roles. One is filling in a gap, where there's a capacity problem, or leveling the playing field. Ex-Im Bank, like many federal agencies, the Federal Trade Commission, Federal Communication, has a 5-member board. Our charter requires that we have 3 voting members in order to have a quorum. The Banking Committee, in all of 2015 and 16, did not confirm one person to any federal job whatsoever, which includes the Federal Reserve, which includes the Assistant Secretary for Terrorism Finance, which includes the Export-Import Bank. I may think we're the most important, but I think terrorism finance is of some importance that you would want an Assistant Secretary to do that. So without a quorum on our board, with only 2 board members, excuse me, we were limited to a $10 million threshold. In the early 90s, the board, to move transactions through, delegated to the staff. Anything up to $10 million the staff could do. Anything below that, the board would consider. It was never anticipated we would not have a board. It was unimaginable. So we now only have 2 members.
So you can't do any transaction above $10 million without board
We could do a
approval.
couple of transactions less than a year, up to say $25 million, but they're short term.
Yeah.
One of the recommendations I will make to the incoming team is they need to adjust the delegation to the staff. And other entities there ought to be a trigger that says if we ever don't have a quorum, and frankly, I hope it will change with this upcoming Congress, and where we have the presidency and the Congress all in one party, but we've had problems getting a quorum for quite some time, and we have a 5-member board, but confirmations have been very protracted government-wide.
And just to get a few more effect, your total balance sheet right now is?
It's about $90 billion. It was about 112, 113 billion at its peak, but without doing any large transactions, the runoff is quite great.
And you were telling me you did $5 billion last year.
We did $5 billion last year. I'm just going to tell you, you have at your seat, it's called a pocket card, inspired by Senator Lindsey Graham, who's a great supporter. I sat in his office, he grilled me, and then he said, "Fred, you need a pocket card." And I said, "I don't know what that is, sir." "You need a pocket card." I go, "I still don't know what that is." So it's, I'm sorry for the women in the audience, it's a very male thing. It's what senators and congressmen put in their coat pockets. So, I know, this is all I need to know.
In a typical year, you would have done how much?
Well, typical is hard. At the height of the financial crisis, we did $36 billion worth of loans, guarantees, and insurance.
Wow.
Last year, we did 5.
Yeah.
Probably 20-odd billion would be in a typical year these days. I don't even know what's typical anymore with the level of financial crisis and so forth. But last year we did $5 billion without a board. The last time we did $5 billion was 4 decades ago. In the 1970s was the last time we had such a low volume.
And so what would you say is the impact on exporters in the United States of your inability to do more this last year?
Well, we've lost a number of transactions. We've lost 3 satellite transactions that went to France. Because France is our main arch competitor when it comes to satellites. When it comes to satellite launches, we compete with France, China, and Russia. So if we can't finance them, they will go to China and Russia and France. In the satellite space, and I'm looking at Paula Swain in the back. Why don't you wave your hand? Paula is in our structured finance group. We were doing up to in the range of $1 billion a year in satellite and satellite launches, financing, commercial satellites. It's a major U.S. industry. We have a real competitive edge, and they're very hard to finance. So we lost some satellite transactions. We lost a number of aircraft that put Rolls-Royce engines on them instead of GE engines. And the impact of that is very long-term. I mean, it's a little bit like the Gillette razor. You know, it's not the razor, it's the blades. If you buy a GE engine versus a Rolls-Royce engine, you've got 20 years of maintenance that will exceed the acquisition cost. So this is having a pronounced impact.
So given we're in Texas, what's the impact of what you're doing on Texas? How are you working with Texas companies? As was mentioned, largest exporting state in the country, so you must work quite extensively.
Well, I counted up. I've been to Texas 11 times as chairman. I've been to Houston 9 of those times. I think part of that is Eduardo, and the other part is Paula Swain. Make sure that I come to Houston whenever I hit the state of Texas. I love telling the people in California that we do more work here than we do in California. It really gets their goat.
Like that too.
This is a major exporting hub. One of the great expertise we have as a country is our knowledge in oil and gas and energy. That is one of our strongest export categories, whether it be power, whether it be oil and gas, whether it be LNG. So that's why I've been here. Paul and I were talking, I think I've probably been to Houston and Texas probably more than any other single city if I think about it.
Okay.
And so, this is my last sort of public address as chairman. President Obama is giving his last address in Chicago today, so when Rob invited me, it seemed really appropriate that the last time I have a public event would be here in Houston.
All right, good. We're glad you're here. So, yeah. So let's talk about why is there opposition and why has there been such controversy over Exim? And by the way, led by a number of elected
Texans.
Representatives from this state. Yeah, why?
Great state of Texas.
Correct. Why? So why is that? What's that about?
Well, this is purely political and purely ideological. Exporters like what we do. Banks like what we do. Foreign buyers like what we do. Financial institutions like what we do. This is not like you could argue in healthcare. Well, there's the hospitals and then the doctors and the insurance companies. They often see things very differently. Or you have environmental groups and energy companies and power companies see things very differently. In this case, all of the people we work with and support jobs see us the same way. Now, granted, some of us like ease up our terms in one case or another. So this was purely a political argument. Exim Bank is a sunset agency, not the kind of sunset with a glass of wine and a beautiful sunset and a little plate of cheese. This is so it requires that Congress affirmatively reauthorize or recharter, renew the lease periodically. Sometimes as short as 2 years, sometimes as under President Reagan it was 6 years. So we became an easy target for Congress, because if Congress did nothing, we lapsed. And Congress at times can be very good at not acting. So as a result, our charter lapsed. We still operated. We still had to service $100 billion worth of loans. We still had to disperse the loans we approve, but we were prohibited from making any new loans.
Why do they want? What's the argument? It's funny, I'm partners in a venture philanthropy firm, Bill Draper, who used to be head of Exim, right? In the Reagan administration, is a big proponent of Exim. Why? What is the? If you can best articulate, what's the argument why we should not have Exim?
Well, there are a couple of arguments. I mean, one is there's a party of debate that what's the role of government. We don't think the government should be involved. There are those who don't think we should have a Federal Reserve. Mm-hmm. They're the same people who don't think we ought to have an Exim Bank. They're the same people who don't believe in a lot of regulatory environment or a lot of supports that the government does. Secondly, a number of Republicans, and I will tell you, though we had bipartisan support, we had a majority of the Republicans in the House. So we lost one Democrat, but we had a majority of the Republicans in the House. We had 2/3 of the Senate. So first of all, what we lacked is support from leadership. Leadership was opposed to the bank, purely on ideological grounds. Eric Cantor had been a great supporter, but Eric Cantor lost his seat, so that was certainly damaging. Jeb Henschling is the chairman of the House Financial Services Committee, was opposed to the bank. And that certainly made it very difficult to get around the chairman. Chairman sets the agenda for his committee. Richard Shelby, as chairman of banking, was not also a supporter, and so we had two chairmen who were opposed.
Because they think it's inappropriate for the U.S. government to be providing credit support to exporters and doing these types of loans.
They believe that. I've heard arguments we have too much debt. I've also heard the argument that how can we as Republicans cut social entitlements, social programs, education programs if we don't cut corporate? So they were very vested in calling us corporate welfare. So they then said, see, if we cut corporate welfare, we can now cut social welfare. And I think I'm being very blunt. Well, I have a week to do. What am I going to? I can't get fired, you know. I could, but it's only a week.
It's unlikely.
It's unlikely. By the time they figure it out,
have to do something pretty
I could run out the clock, you know.
Something bad to get fired tonight. Yeah.
I think some of them wanted a scalp, wanted to say, you see, we cut government, you know. Some of you may remember Newt Gingrich, when he had the contract on America, one of the things he talked about was selling a congressional office building. It was really nice symbolism. We're going to cut the size, we're going to get rid of a whole building. That building is still there. That building has been modernized and renovated and looks quite nice today.
All right. So let's talk a little bit. I think I get it. So as chairman, how do you spend your time? What do you do?
Worrying.
Okay. So you spend a lot of your time on the Hill.
What do
you spend your time doing?
Yeah, as chairman of the bank, I would say that one of the things that changed in the almost 8 years that I'm there, that navigating the political waters became a much more pronounced part of the job. I would say a good, probably 2/3 of my time is really external. It's either managing our relationship with the Hill and stakeholders, the White House, press, and just our lending partners around the world. And then I'm very lucky to have a really good chief operating officer. So in terms of managing the enterprise, though I still run a weekly staff meeting and I get a weekly report from all the senior executives, so I know.
And there's a lending committee that meets regularly, and your chief operating officer chairs that?
Well, actually, our inspector general had us separate the sort of credit policy and oversight from the loan making. So we have a transaction risk committee, TRC, transaction risk, did I get there?
Yeah.
Transaction review committee,
Okay.
sorry. It's been a while since we had a board meeting. Transaction review committee that essentially reviews transactions. First, at stage one, is this really within our strike zone at all? So we ought to let the exporter know or the buyer know this is really kind of outside of our range. Then the preliminary work is done, stage two, and then stage three is when essentially the transaction review committee said, okay, this is ready, it's got the staff approval, the attorneys, the CFO, the banking group likes it, send it to the board.
Can I ask you one question I hear a lot? If the Small Business Administration is not as controversial, correct?
Right.
Why is that? Why is that not controversial?
We have a romantic view in this country. We love small businesses. We love small family farms. We like small regional local banks. I mean, they've had their share from time to time, but there is we have so it's a romantic view. That's the best I can say.
So let's talk a little bit about trade. We do a lot of work at research in this district on trade, immigration, other issues. And our research shows global trade, and you see this has actually slowed. Some of it has to do, and you and I have been talking about this, it has to do with slower global growth. What are the prospects for global trade? We'll talk a little bit about some of the things going on right now, but why is global trade down, and what are the prospects for it in the next few years, in your view?
Well, unfortunately, it's challenging to really pinpoint precisely why global trade was at one point growing at about 2 times global GDP. So if the global GDP was growing at 5%, global trade was growing at 10%. I'll give you some other benchmarks. Generally airline traffic, aircraft passenger seats grow at about 1.5 times GDP. So if a country is growing at 7%, frequently air traffic grows at 10 or 11%. In the last few years, all of a sudden, global trade, instead of growing at 2 times global GDP, is growing at about half. And we're still trying to figure out why. Now, part of it, my hunch would be the oil industry has slowed down, so that's a large portion of global trade, and that is, I don't know the precise percentage, but that's clearly a factor. We have a lot more digitization, so that a lot of transactions are really happening digitally and over the internet, so there's less transfer of goods. We're also finding the era when a U.S. company could make things here, open a small sales office in Addis Ababa or Johannesburg and have a salesperson and 2 or 3 people, and that was all they needed in that country to have a foothold, are over. If you're going to be selling farm equipment, rail, power equipment, countries now say, well, that's all great, but we want you to do some of the manufacturing in our country. Right. So I think that's also changed. I mean, Ford, when there's been a bit of the news lately, Ford in many countries is seen as a domestic company. People don't see, or Opel is seen as a German car company, not an American company with it.
To support what you're saying, while the global trade has been declining, the percentage of the S&P 500 that is outside the United States has been climbing, getting close to literally 40-45%. So it tells you this trend, more companies, including the one I worked at, or if you want to do business somewhere, you have to locate offices, facilities, people. And so that may be distorting in a way,
That's
I guess,
right.
Trade statistics.
So, and part of it is just capturing the data is actually harder than it appears.
So in light of that, we talk a lot, especially in my previous life at Harvard, about U.S. competitiveness. What's happening to U.S. global competitiveness in terms of trade? We know on goods we run a deficit. On services we actually run a healthy surplus.
And on commodities run a surplus.
Yes.
One of the odd few developed economies that actually has a surplus in commodities, farm goods, cotton, wheat, things, soybeans, and so forth. So
what does the deficit say about U.S. competitiveness, and what's happening to U.S. competitiveness in your judgment? Well,
first of all, the levers to increase exports and the levers to, quote unquote, decrease imports are very different. So, I once got into, it was kind of fun, I got into an argument with Robert Reich. We both wrote a piece in Huffington Post and just dueled back and forth. Because he proposed we should look at net exports, and I said, no, we should just look at exports purely, because what drives exports is very different than how you reduce imports, and they're different remedies. It's like saying, well, if you study hard in math, I'll do better in English. No, studying hard in math will improve your math skills. Studying hard in English will improve your English skills. There's not a crossover. So we are increasingly competitive. I'll give you, in manufactured goods, we calculate, working with the Bureau of Labor Statistics, so it's through the Labor Department, how many jobs are generated for $1 billion worth of exports. When I got to Exim Bank, it was about 7,250 jobs, looking at the whole supply chain. So you don't just look at the last stop in the manufacturing, you look at the entire supply chain. Last year was about 6,200. So that is a huge drop in the amount of labor per manufactured dollar. That is a good thing. Were it not for that, we'd be increasingly uncompetitive. We would not have a competitive edge. We could not sell goods and services overseas. But even though we've had a great increase in exports, when President Obama was elected, was about a little over $1.5 trillion. It's now about $2.3 trillion. It's up almost 50%, 48%. But we need less labor per dollar of export because, well, a couple of things. There are less. Do you remember when you used to buy a car, we were always afraid of getting a lemon? Well, there are no lemons. The manufacturing process has improved to this extent and that is a boon to productivity. And I go into a number of manufacturing facilities, and you look around, it looks like it's on a perpetual coffee break.
So let me ask you a related question. We talk a lot here. We do a lot of work in this district, and we've got Roberto Coronado, I see in the back, who call him out, who runs our El Paso office and does a lot of work on trade. We've made a big note of the fact that of the U.S. imports from Mexico, 40% of imports from Mexico are U.S. content, which means they're integrated supply relationships, which we think increase jobs in this hemisphere and in this country. What's your judgment? Is that you agree with that, or what's the impact of these integrated supply chains? And if we do less of that, what's the impact on competitiveness and jobs here in your judgment?
The only thing I might disagree, I heard it was as high as 50% of the goods coming in.
Fair enough.
But I totally agree with you. Here we are in the world is more integrated from supply chains and everything else than it's ever been. And yet countries around the world are becoming more nationalistic and more tribal and putting up more barriers. And maybe it's just simply the change has happened so fast that people aren't able to absorb it at the rate of speed it's happening. One of the views has been that between Canada, the U.S., and Mexico, and I was in Mexico until this morning, there are 500 million people. If we can get more integrated on manufacturing, innovation, and product development, we could become a much better counterweight to Asia than if we all try and go it alone.
Right.
And the barriers are really more political than they are commercial or economic. So I'm hopeful.
Which means companies get it, but you're not sure country leaders get it. And I think people of the benefits of an integrated market are spread widely. In terms of people have argued that the benefits of globalization and integration with Canada and Mexico, adds about $10,000 worth of purchasing power to each American household, which is a lot. Yeah, it's a lot.
The detriment is narrowly based because somebody loses their job or a factory closes, but part of that is also mixed up in automation. Part of that is mixed up in the fact that trade is an easy thing to blame it on, but I think a lot of it has to do with other factors. There was an article in the paper in Georgia. There's a textile mill that closed down, 4,000 employees, and Marriott Corporation decided to make all of its towels in the United States to move that, and they will have 300 or 400 employees. So that's not about trade. That's
so automated.
They're so automated.
Okay. All right, let's stop here. Let's take some questions from the audience here. Just if you'd step up to the microphone, don't be bashful. And I guess while you're making your way there, I'm going to ask you one other question, which I'm going to stay away in this job. I do stay away from politics. When you see efforts, though, of companies that are deciding now to hold off on either locating a plant in Mexico and are going to keep these jobs in the United States, what's your reaction, and what do you think is the net effect or will be the net effect on the economy and the United States of those activities?
At the end of the day, companies need to make economic decisions that they can deliver goods to the marketplace at a price the market will pay for them. So, I would say, listen, we are seeing actually an onshoring of many jobs. I mean, there are companies that have moved to China that are now moving back to the United States. As costs have gone up in China, and the whole fact that we're automating factories here has made it more and more economic to actually put work here, because the labor portion that might be very high is a smaller and smaller percentage of the cost of goods. We're going to get to a point, for example, I was talking to someone out in California where if you want to order a pair of Nike sneakers, you can decide what it looks like, what the color is, and they'll deliver it in 24 or 48 hours. As we get to that, we're going to have more manufacturing here because they're going to locate that factory next to a FedEx hub, next to a UPS hub, not 8,000 miles away and put it on a boat and take 25 days to get here.
And that trend of Toyota coming here employs substantially more people than they ever have before. Your point is there's a number of examples of that.
Yeah.
All right, please.
Thank you. My name's John Heimsath. I'm with ACM Logistics and Consulting. We are international freight forwarders. So we were, as a community, because I'm part of the Houston Customs Brokers and Freight Forwarders Association. So as a community, when Exim Bank was first not refunded, I'm saying the wrong words, I know, and then also when they were hobbled with not a full group, we noticed that there were less exports that were going out of the Port of Houston. It was also interesting that I sat in on many different meetings talking about trying to see why Exim Bank wasn't being refunded or wasn't being reauthorized. And one of the things that came up was, it was interesting that in each county, you can see the number, you can see the name of the companies in Texas and how much they actually, so you see that there are actually a lot of Texas companies that were being funded, right? And I started to think about this. I said, well, so why is it that the Exim Bank had such a hard time? And this is the question that I have now to you. So where is the M in Exim Bank? Because,
the import?
Yeah, there's not really much import. It's all export. So this is all an export thing. So if we would just rename Exim as X, then maybe that would just fix it.
I get this question a lot. So we would be the United States Export Bank, and we'd be called USEX. And I think we've had enough trouble with Congress without putting sex right in the center of our name.
What do you have to do with imports? That's actually a good question. Why is
So in the early days, before Eduardo and I were born, Export-Import Bank would sometime finance U.S. equipment to developing countries, and then to help those countries repay the loan, we would buy some of the goods back, the finished goods. That was hence the Exim Bank. So, and today, most of there are 85, I actually, I've got a copy, we do a competitiveness report every year. There are 85 export credit agencies, that's what we're talking, EC export credit agencies around the world. Most of them are referred to as Exim banks, but very few of them do imports. Frankly, imports get in our country, they don't need my help. Exports are another thing, but imports, they don't need any help to get here. They find their way in without any issue.
Yes, sir.
My name's Rick Massey. I'm an independent consultant in the energy business, upstream, downstream, midstream. But what I'm wondering, you said that Congress has to reauthorize you. How much money is involved in that? Are they giving you anything to work with, or what?
Zero.
So,
we make money. We send money to you, the taxpayer, every year. Since I've been at the bank and under President Obama, we have sent $3.8 billion in cash. Not a bookkeeping entry, not an accounting journal entry. It's a very sad day for a chief financial officer, but that cash goes like that.
So your $90 billion of footings, you have that. What do you need Congress to provide credit support?
All they supply us with is the authority. Well, every 4 or 5 years, they give us the authority to make loans and guarantees and insurance, and we collect revenue. We collect revenue, put aside a loan loss reserve like any responsible institution. Congress then says, over what's left over, offsetting collections, we will let you retain about $100 million to run the place, and the rest goes to you, the taxpayer. Now, let me just tell you, so you think of your business, you take sales minus cost, what's left over is usually called profit. You know what they call in the federal government? Negative subsidy. It's like when you go to the doctor, and the doctor gives you a physical, and he or she says, Rob, everything is negative. And you sit there and you go like, is that good?
So if they shut you down, the government ultimately would get that $90 billion to use.
No, if they shut us down, the $90 billion gets, well, no, that is what is owed to the lending institutions, because most of those are guaranteed loans.
So you're operating with a very small amount of equity because
we have no equity because we're a government agency.
You do that because you in effect have the implicit guarantee.
That's right. We have the full faith of the United States government.
So there's actually no money ever the government doesn't provide the credit support anymore.
No, essentially what we do, I mean, think about what they do, the government does, they give us the full faith and credit of the United States government. If your son or daughter needs to buy a car and you co-sign the loan, the bank or the institution is relying on you as backstop credit for your son or daughter to buy a car.
In
That's
the
what we
worst,
do.
in the worst of the crisis, your loan losses were,
Well, if you look at the crisis from 2008,
yeah,
they were all less than 1%.
Wow.
We were just about 1.1% in 2006. That was a previous from loans made in 2002, 3, 4.
right, okay. Yes, sir.
Jagdeep Aluwali, I'm with the Indo-American Chamber, but I also serve on DEC. You were talking about the
I love the deck.
You were talking about the optics of corporate welfare. Can you clean the lens and explain the number of jobs that are created when, let's say, a Boeing sells an aircraft?
Sure.
Because people don't really realize that.
So last year we supported 52,000 jobs. In my tenure at Exim Bank, it's been over 1.4 million jobs. And using the calculation I gave you earlier, for 5, 6, 7,000 jobs for $1 billion worth of exports. So we are essentially a job generation agency. That's really our report card. Frankly, the money we send to you, the taxpayers, is a good thing, but the more important thing is the 1.4 million jobs we're supporting, because that has ripple effects throughout the economy. And to your point, when Boeing sells an airplane, we calculate the jobs at that one point of delivery on the loans we made. The fact is, the maintenance on that, which is frequently done with American parts and all of that, and the supply chain. Boeing has 15,000 suppliers around the country, virtually in every single state, that benefit from that. I was with a company this afternoon that sells to Pemex, the petroleum company in Mexico. We have not been able to approve a loan guarantee to Pemex for over a year and a half. And he said, my business is dried up. I mean, until they get the credit, I can't make these sales. I got a business with $6 million in sales. This has a real impact.
Yes, sir.
I've been an admirer of the Exim Bank since H.K. Allen was on the board. But one thing I've never understood, is there any dialogue between our bank and the equivalent agencies in other countries? In the construction industry, one of the things we see here is a great deal of the large infrastructure construction that goes on in the States is being financed by foreign contractors who presumably are using primarily their host government's money to finance their activities in the States. I'm wondering, is there any dialogue back and forth between your bank and their banks as to netting out or equalization of opportunities? Because curiously, the American companies, when they're bidding on projects across the pond or Middle East or otherwise, don't seem to get the same advantage. So is there any?
Well, we work with, as I mentioned, and this, I have an extra copy if someone would like, but, and they're heavy, so I'd love someone to take this home. There are about 85 export credit agencies around the world. On many cases, we will co-finance with them. So if there's a project that Canada we do a lot with, so if part of the product or construction has come from Canada, part of the United States, we'll finance the U.S. portion, they'll finance the Canadian portion. So we do a lot of co-financing with other export credit agencies around the world. We hosted the G7 of export credit agencies 2-3 months ago. There's a meeting I will miss in the next month of sort of the top 12 export credit agencies. But we do a lot with them in that regard. There's not as much need for foreign governments to support transactions here because, let's face it, thanks to Rob, we have the best financial services industry in the world. It's all you.
Yeah,
we have the deepest markets, the most sophisticated markets. They make mistakes on them, but we have a very deep financial market that really is not equaled anywhere else in the world.
Yeah. Let's see. Yes, please.
Yeah, my name's Jack O'Connor, and I was involved in the manufacturing business. But I asked, the intent of the XM Bank is for export, to push it. But nowadays, it's really changed a great deal from FDR's time to the 50s, 60s, 70s, that a company can manufacture something, or it can completely import something, even in its box, and ship it out. And I was in the pump business, pump manufacturing business, had some Egyptian projects that we benefited from. But I asked the question, if is the XM Bank, do they drill down and see if there's any American manufacturing in it, or can it be somebody that completely made in China? Because I know most castings, for instance, come from China now.
We only will finance the U.S. portion. We actually look at the content. We have an engineering group that looks at the content. It's got to be verified. So if 60% of the content is from the U.S., we will finance up to 60%. We do not finance the foreign content.
Oh, and you do drill down then?
We do drill down.
Okay. The next thing, just if I can, just politically, do you use any arm twisting also to get the exports politically? In other words, we'll be nice to you, or we'll do this, or we'll do that. There's other quid pro quo issues. Do you use that as a leverage?
Well, if I understand the question correctly, I will tell you, we worked with Dow Chemical, which did a joint venture with Saudi Aramco to build a petrochemical plant in Saudi Arabia called Sadara. And when they first came to us, it looked like there'd be about $1.5 billion worth of U.S. sourcing. Working with them and making them understand that we would provide the financing, we got pretty darn close to $5 billion of U.S. goods and services into that. So in that case, our financing had a direct impact of actually increasing the U.S. content. As I wrap up my time at the bank, I've been calling customers and exporters, and one of the things that has come to light, there are 2 transactions overseas that may buy as much as $8 or $10 billion worth of U.S. goods and services. And in both these cases, they said, if we don't see that you're going to have a board, and if that's going to be in jeopardy, we will have to change our sourcing from the United States to either Japan or Korea or Germany, elsewhere, because these projects are too large and we need the financing. So if we can't rely on you, and as an American, the idea that someone says we can't rely on America, I find that quite shocking. But if we can't rely on you, we cannot stop the project, and we need the financing.
So let me see, and on the Dow deal, in that case, you had a board. How big a loan did you make there?
$5 billion.
You made a $5 billion
largest single loan we've ever made.
Wow. So if you had a board, you'd be doing some mega deals and small deals too.
Yeah, I mean, we're in an odd period. I mean, right now, with as you all know, in Houston, I mean, the energy business is in a somewhat of a trough. So the large deals we did were in petrochemical, mining, and usually it was
big projects.
Yeah, and generally where you had 2 parties, so there wasn't a balance sheet, or one of the parties was a government. So when there's a government in a private sector, 1, it's harder to borrow the money, and 2, frankly, we have a lever as the U.S. government. We can help keep the deal on track.
Yep.
Better.
Fred, to the extent you can you share with us what's likely to happen in the coming months, what the Republicans will do, a new administration? And my presumption is, you've done a great job in helping Houston and Texas and the U.S. with exports. We've seen you here a handful of times. So my guess is you're going to be involved in a transition. But to the extent you can, share with us what the future holds.
I got my crystal ball.
By the way, does your term end when the
My term ends at the end of the
administration? Okay.
The president has an ability, President Obama has an ability, and President Trump will, to name an interim chair and interim vice chair. So we already have an acting vice chair. We have a landing team, which is the term used that's from the transition team, has been into the bank, and has been meeting with our senior team, and we provided, believe it or not, I mean, a book about this thick. When I got to the bank, it was a book like this thick, so that we put it on a Cliff Notes version to make it simple. I have heard, just in talking to members of the Senate, 1 or 2 people I know in the transition, that they're actively talking about who will be named chair and vice chair into the board. But President-elect Trump has an unprecedented opportunity. There'll be 5 vacancies on the board, which has never happened before.
Those full-time or part-time jobs?
Full-time.
Full-time jobs, because you're meeting to review loans all the time?
And then what I'd like our board members to do is what I have done is come to Houston, go to Des Moines, go meet with exporters, make sure small businesses understand you don't have to go out there by yourself. We can support you.
Right.
I met a company this morning. I remember this transaction for some reason. It's called Royal Manufacturing, and they provide maintenance and retrofitting for mining equipment. And it was a $25 million loan guarantee we made. They went to Australia. They sent their people there, did all the retrofitting and maintenance. And he said, you guys launched our business in Australia. We now have a really robust business there. Australia, the mining boom is a little bit off, but he said, without you, we never would have gotten there.
All right. So let me ask in closing, we've got a few minutes left. What's the biggest misconception about trade? Not just the EXIM, but what's the biggest misconception about trade that you see right now?
I think people confuse trade with outsourcing. They have nothing to do with each other, but they confuse it with outsourcing. And so somehow, I wish we did not call it free trade. I wish we called it fair trade, because goods come into our market with very low tariffs, very low requirements. The barriers to export into Japan, Korea, Vietnam, and so forth are huge and very difficult. So an agreement like the Trans-Pacific Partnership was really making sure that it was actually a level playing field for American companies.
Right.
And that just got lost in it.
And based on my look at TPP, it looked like we were not giving much, but we basically got almost all the gains.
That's right.
The opposition to TPP is what?
Well, labor has been opposed to it. They don't feel that
It will cost jobs here.
Right, and that and listen, trade does rejigger when you have a trade deal, some industries and some products will become less competitive because they'll have more foreign competition. So you have to have a belief that if you have less barriers, less friction, ultimately we will do better, because we're a very innovative society. We have inexpensive power rate relatively. We've got good rule of law. Our infrastructure could be better, but it's still better than many places. So all things being equal, we will do much better.
And the U.S. barriers that would come down as a result of TPP that would make it easier to sell here would be what?
We don't really have a lot of barriers. So, I mean, that's why this really does open it up for us to be able to sell in these other markets. And we have put in, I mean, I don't want to be, I don't think TPP is going anywhere right now, but I mean, it was putting in labor standards, environmental standards, child labor standards,
right,
the kind of things that would make it more even with the United States, that the requirements that countries would have to trade with us are comparable to us.
So what we've talked a lot, what if TPP, let's assume TPP doesn't happen, and it looks like it's not going to happen. I gather what's going to happen, what I hear is China, other countries are going to do a series of bilateral trade agreements themselves. What's going to happen with trade as a result of no TPP? What's the implication?
Well, China has something called RCEP, the Regional Cooperation Economic Partnership. Essentially, it's the counterweight to TPP. They're already working on this, forming an agreement with 8 or 10 or 12 countries in the Pacific area. They will write the rules, they will set the terms, and we will be on the sidelines.
And the ability for U.S. companies to sell into those markets?
Well, we still will be more challenging, precisely what it will be, but it's certainly not going to be on.
The barriers will still exist.
Barriers will still exist. They're not dropping for us. I mean, so that's, what we face. I mean, the interesting thing, the biggest supporters of TPP have been our military, because they say that if we have a presence there, our relations with Mexico have been far better since NAFTA than they were before NAFTA. And so partly we haven't ever talked about the advantages of a trade deal being also diplomatic. I'll give you one other just data point. When we did NAFTA, the United States did NAFTA in the mid-90s, there were about 12 free trade agreements globally. Today there are over 600. So we were leading the pack, and we're now going to get sidelined or fall behind.
So I'll ask you one final question in closing. You've been in this job for
Just shy of 8 years.
just shy of 8 years. What made you do public service? Why did you, and for those in the audience who would like to do public service, what advice would you give them? What's been your experience?
First was, this is the best job I've ever had. It's an exciting job, partly in doing public service as you do, and that is you have an impact on a very broad basis that it's hard to equalize in the private sector. So in terms of, I feel, and we talk at Exim Bank, it's even on a bad day, we still, even in a low year like last year, one of the lowest years in 40 years, we still support 1,000 jobs a week, 1,000 jobs a week. In good years, we were doing 1,000 jobs a day. It's hard to get that kind of impact for anything we do. My family immigrated to this country. My mother came here from, they left Nazi Germany in 1933. So an ability to really do some public service and to operate at that level was a unique opportunity. And I wouldn't pay, if you have the opportunity, I would certainly take it. There's a gentleman here on the deck, right? The District Export Council, because we love acronyms in Washington. Nobody uses words. The District Export Council, there are about 50 around the country. How many are there? About 50. It's it's part of public service. It's actually advising and working with the Commerce Department in areas like that. So, this is a great country, and it's only greater if we're more engaged. We still have one of the lowest percentage of people voting. More people voting, more people being engaged, we'll have a country that reflects more of our values.
Fred, thank you for your service. Thank you for being here.
Thank you.
Thank you, everybody.